Welcome back. You're watching India Market Open. CenturyPly boards reported a strong volume-led quarter with plywood growth exceeding estimates and margins improving despite a challenging environment. Before we speak to the management, Puneet joining in for a quick setup.
Well, thank you for that. Well, from paneer to plywood, the growth has been very strong for Century in this particular quarter. A 33% revenue growth that they've done as well. And what is the significant factor is that, the growth could continue in the near to medium term. So there's three key questions from the management. One will be on the timber price, so how they've been acting up, a key raw material for them. The other factor is if demand continues to hold up and if FY27 could show that growth. And the third and the final one on the logistics side, it's a new vertical for the company. If they are looking at strategic investment that could lead to a second leg of growth in a new vertical, those will be some of the key aspects from this conversation.
Got it. All right. Thanks so much for that, Puneet. Keshav Bhajanka, who's Executive Director, CenturyPly Boards, joining us this morning. Keshav, thanks so much for taking the time. Good afternoon to you. Alex here. So talk to us a little bit about the trends that you're witnessing, because seemingly across the board, building materials have actually had a pretty decent quarter, notwithstanding all of the pressures on the external front. So what are you seeing on the ground?
Good morning. Thank you so much for having me on the show. I think that, by and large, what we are seeing is that domestic demand remains somewhat robust as far as our sector is concerned. We have seen broad-based growth and all four of our business segments have grown. Plywood has grown very well, MDF, particle board and laminates. And we are expecting to see continued growth in the following few quarters. There has been some volatility on the raw material cost. This is predominantly due to crude-based derivatives that form a part of our chemicals or our resin. I think that volatility is there to remain until this war continues. But on the demand front, I don't see any challenges going forward.
Then have you undertaken any price increases in the first quarter that have led to a margin improvement? Is there an element of inventory gains that you've had, and will that sort of ease out or reverse in the second quarter? What is the trend that you're seeing?
Yes, we have definitely taken some price increases over the course of the first quarter. And in certain segments like plywood, those continue. But in segments like MDF, where there has been a lot of volatility, when raw material prices come down, those price increases are rolled back. And when, again, you see some semblance of increase, then you further push the prices up. Having said that, I think that for us, July has been very robust. It has actually been the highest month that we have ever done. And we expect a strong Q2 as well. August till now looks fairly good as well.
Okay. Keshav, my question to you then is if you could help us understand the quantum of price hikes that are already taken and the additions that could happen throughout FY27. And the reason I ask you this is because in the past you've mentioned about FY27 and 28 that these 2 years will be good growth years for the company because a lot of your assets that you've created will actually be sweating it out over here. So what is that kind of revenue growth margin profile that investors should realistically watch out for?
So currently, we're not really giving any guidance because, the situation remains very precarious as far as the external macro environment is concerned. Having said that, I think we have grown at a CAGR of 20% plus over the course of the past so many years. And I think that we are in a position to continue growing at that CAGR, at least. With regards to price increases, in plywood, we have done 5% plus, in laminates 5% plus, in MDF and particle board 10% plus. But in MDF, we have had to roll back a certain quantum due to a certain correction in resin prices. But this is a very, very volatile situation. Prices are increasing or decreasing on a daily, if not a weekly basis. So we will have to wait and watch.
Okay. Keshav, so going ahead, capacity expansion, market share gains, premiumization or margin improvement, out of the four, what will be your priority?
I think we have already expanded capacity. So, ramping up, like you rightly said, ensuring that there is operational leverage and better capacity utilization, that will definitely be a priority rather than new capacities, other than plywood, where we are almost running at full capacity. So we need a new capacity, which will come up maybe in October, November of this year. Premiumization is definitely a focus area, and growth, I think, remains the key priority.
Keshav, hi, Tamanna here. Just a couple of quick questions. You spoke about price variations and the impact they're having on both MDF and particle board. I mean, particle board has been your bumper hit in a sense, right? How do you expect that to grow? Where do you see the maximum growth coming in from? Which segment?
So I think that, there is growth that is robust across all the segments. I think plywood has been our growth driver in terms of absolute as well as percentages. I firmly believe that, all our segments will grow. Particle board, the reason that you're seeing such a big jump in quantum is because we have come up with a new capacity from a 200 to 250 cubic meters capacity earlier. We are now at a 800 plus cubic meter capacity. So that gives us room for growth. Earlier, we were being limited by capacity, which is no longer the case. So I think you will see broad-based growth. You will see growth in all the segments. And we are fairly confident that each of the segments is well poised to increase both market share and to increase profitability in the near future.
Can I just get a sense of your debt repayment plans, Keshav, going ahead?
I think our cash flow generation remains very, very strong. And currently, you're seeing a spike in debt because we have grown substantially. I think when you grow close to 30%, the working capital cycle also gets affected. Going forward, I think now, since there is no major capex, the bulk of our free cash flow is going to go into debt repayment. And this, I think we're in a comfortable position as far as debt is concerned. And now peak debt is already behind us. So I think you will see deleveraging in the near future.
Okay, when you say near future, can you specify when you say deleveraging, by how much? Is there sort of a ballpark idea in mind?
Yes. Quarter on quarter, we will be looking to deleverage. And within the next 2 years, our long-term debt to EBITDA will be within the ratio of 1. So I think that is the target that we take. Working capital, of course, you will have certain debt. But our debt to EBITDA ratio, as far as long-term debt is concerned, will be under 1.
Let's have a quick question on your logistics vertical before you let us go. Tell us the rationale about that. It's fairly new. Why do you want to get into it? How much do you want to expand it?
So I think we have been in logistics for the last 2 decades now. We're actually running container freight stations at Calcutta Port for quite some time. An opportunity presented itself for backward integration. Instead of just running the CFS, we had the opportunity to take over a couple of berths at Kidderpur Dock. And this would give us a complete value chain, give us a different value proposition to the one that we had earlier. So it would enhance the valuation of the current business that we have as well. So we have started on this from, I think the official commissioning date was around the 20th of March. And last quarter has been EBITDA positive. I think it has also been cash positive. Going forward, we see this as a good growth engine. And as this is not one of our key verticals, maybe in the future, we will look to monetize part of this asset as well.
Okay, that's interesting. You don't have any timelines for that though, Keshav?
I think it is a question of when you get the correct valuation. Today, we have to create shareholder value. So I think within the next year or year and a half, we should be able to do this.
Interesting. Okay. All right. Thanks so much for taking the time. Wish you all the best for FY27. Talk soon. All right. It's time now to move to our next